This is Gbpjpy. Day one time frame obviously is what we're looking at right now. So ilimwagika last week because of the Russia issue, and obviously JPY is a safe haven, so anytime there's a crisis, the JPY tends to be bullish, obviously, meaning that XXX JPY will be bearish. So let's say this example, it had a clear one of my favorite patterns, M pattern. M pattern is a bearish reversal pattern. This is a pattern that happens after a bullish run, and the market wants to reverse. So basically what happens in an M pattern is that the prices tend to form maybe an equal high or spikes slightly above the previous high. So in short, prices tend to play at around the same level of highs, but then when you look at the momentum indicators, in this example we're using RSI, you'll notice that there's a divergence of price and momentum, meaning that price made an equal high or an higher high, of which there was a slight spike above. These are a market technique where a smart money looks for liquidity by hunting stop losses of early sellers and triggering buy stops of people who are expecting that when prices reach there, they'll trigger the level and continue being bullish. So these are technique where once the prices reach an area of interest, you look at your momentum indicators, because if it was a real move, if the prices was to still continue moving upwards, you see when the prices were last time Gbpjpy was at 157.7, the momentum indicator showed that the volume of the cash that was in the market was at 73. But then the next time it reached the same level of price and actually hiked higher, it went to 157, 158, 158ish. But then the momentum indicators were lower at 63, meaning that these are false move. That is the ideology behind the M patterns. So maybe I'll review on the trade I took last week on Gbpjpy, because I took at around somewhere here. But then for today, we're going to look at the second scenario of executing a position once an M pattern breaks the neckline. So first of all, we have identified that we have an M pattern. Confirmation is that there's a very strong divergence of the price and momentum, meaning that these are legit reversal. Another thing, the neckline was breached. So now we are going to, and actually the neckline was breached. The prices is a complement with a high momentum. So what we're going to be looking, 2 days on Wednesday, what we're going to be looking for is an opportunity to go bearish. Now, another thing, every setup that the market offers has a specific way of identifying a place to enter and the places to exit. The places to exit meaning stop losses and TP. In this example, we have our M pattern or double top. How should you calculate the target after the break of the neckline? Theoretically, the move from here, meaning the highest point of the M pattern to the neckline, is exactly equal to the move that will take place after retest to the take profit. Okay, after retest to the take profit. So retest should happen somewhere around the neckline. So now what we're going to do is we're going to look for possible areas where we can take our position. So go down to lower time frames. Now notice that at real moves. The last time the prices were this low, the momentum was around here. The next time the prices are lower than the other time that they were this low, the momentum is low. This meaning this is a legit move. So now we come back to, we've scaled down to lower time frames. We come and look at areas of interest. So if you've been a follower of the ICT strategy, the ICT strategy is one of the strategies that have come to like because of their fairly large RR and very precise entries. So kama unatolewa mbio, but then when it goes to your direction, you'll have a nice setup. So in this example, we look for our order block. Order block is where there is a candle of the opposite direction followed by a sharp reversal. So in this example, here's our order block. GUN will go a bullish candle, then followed by a very strong bearish rally. That's rule number 1 for ICT. Rule number 2, obviously, first momentum and the OB should be strong, of which you can see it's strong. Third rule, the prices come and break the swing low for bearish cases or the swing highs for bullish cases. In this case, we are in a bearish case, so our position will be, our swing low was here, so we've made a, let me show you, we made a, this is a lower low. This is a lower low. Then copy clone. Yeah. Then now we've made another lower low. So first thing, there's a opposite candle followed by a sharp reversal. Then that thing, the recent swing low for bearish cases is breached, meaning that all reasons for supporting the, according to ICT strategy, have been confirmed. So now we'll be looking for Gbpjpy to retrace to our area of interest in the OB. So this is where we'll be considering to take positions. So this is what I'll be looking at. I'll be looking for the bulls to run up to this, around this place, so that I can take my positions. So where will my stop loss be? According to ICT strategy, the stop loss should be a few pips above the OB. Where will be my target profit? My target profit, target 1, will be the new swing low that has been formed. Okay, reason being, because I'm executing this position, I'll be taking this position using the ICT strategy. So this will be where the recent swing low is, where my first target will be. Let's see if it's a fair trade to take. Obviously, it's not a holy grail. What we do play with in trading is risk to reward. Okay, so my stop loss will be somewhere there. my first target will be in the fresh swing low. Here we have a RR of 5:6, 5 of 1:5.6. That's fair. What does an RR mean? It means that for every $100 you risk, in this case, if it goes against you, you lose $100. If it goes to your direction, you'll have yourself $568. That's what an RR means. That will be my target one. Second target, as I told you, see this, the distance from the topmost swing high of your reversal pattern to the neckline is same distance. I will consider taking from the place I execute to my target, which is around the same prices. So I will consider taking my profit with this first strategy, the ICT strategy. Yeah. So I think we have analyzed our Gbpjpy. Let's recap. Daily time frame, we identify our M pattern with a very strong divergence in the momentum direction, in the momentum indicators, in this case RSI 14. Second thing, we are trading a second scenario for, there's the first scenario where one executes, there's a first scenario of trading the M pattern where one executes in the initial stages as it is being formed. The second scenario is where you wait for a break of the neckline and then wait for a retest so that you can execute your conservative position. Okay, so in this example we've been looking at scenarios where our second scenario where we wait for the neckline to be broken, then we wait for the retest to consider taking the position. So in our day one time frame, we've seen the M pattern with a very strong divergence. Then we've noted that our neckline has been breached. So what we'll be looking for either this week or next week, we'll be looking for prices to, then okay, we've scaled down to low time frames H4. In this case, we've looked for an entry that we'll consider taking position, an entry with a good risk reward. So in this case, we've used the ICT strategy where we noted lower low, lower high, lower low. Then there's an OB there, followed by bearish rally. The swing low has been breached, confirming the third rule of ICT. So we'll be waiting for the prices to retest at this position so that we can consider taking our positions around this place. So once prices are in this area of interest, OB, we can now scale down to time frames of up to minute 1, minute 5, and identify patterns like the week of pattern showing exhaustion of buyers, so that we can get a more precise entry if interested. In the other case, you can actually just put a limit there, a stop loss above the OB, your target in the fresh swing low. And that's it for Gbpjpy. Let's see how things turn out to be. Yeah.